This is the Southside School of Financial Freedom Watch List and Market Report for the week ending September 5th, 2020. Our question this week is, what is the racial wealth gap? The answer will be provided later in the video. The market does one of three things every day. It goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways. Economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was down. It was the first down week in months. The Dow Jones Industrial Average decreased 0.56% on Friday, and it was down minus 1.82% for the week. The S&P 500 decreased minus 0.81% on Friday and was down minus 2.31% for the week. The Nasdaq decreased minus 1.27% on Friday and decreased minus 3.27% for the week. Looking at the week, we can see that the Dow Jones Industrial Average and the S&P 500 fell on Monday. All the major indices were up on Tuesday and Wednesday, and they were all down on Thursday and Friday. On Thursday, the new unemployment claims were 881,000 versus 950,000 expected. Payrolls increased by almost 1.4 million, and the unemployment rate was reported to be about 8.4%. Again, that was better than the expected 9.8%. The U.S. trade deficit hit a 12-year high. It jumped to 18.9%. Congress still hasn't come up with a new stimulus deal to help people who have lost their jobs due to the pandemic. And the Russians have started distributing to their citizens a COVID-19 vaccine. New unemployment claims, congressional actions and inactions, pandemic developments, and trade deficits are news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up, down, or sideways is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down, but with an upward drift. The market will continue to go up because the powers that be want the market to go up. One of the powers that be is big financial institutions like banks and hedge funds. These institutions buy, sell, and create financial instruments that drive the financial markets and drive their profits. The heads of these institutions, like Jamie Dimon of J.P. Morgan, are billionaires, and their wealth is tied to the stock market. While the poor, specifically ADOS families, have almost no wealth. Which brings us to our question of the week. What is the racial wealth gap? Specifically, what is the wealth gap between white families and ADOS, that is, black families? Wealth is the value of assets like your house, car, and stocks, minus your liabilities, like what you owe on your mortgage, what you owe on your credit card and student loan, and other debt. The racial wealth gap is the difference in wealth between white families and ADOS families in America. According to the Brookings Institute, reported in 2016, white families have an average wealth of about $171,000, while black families have an average wealth of about $17,150. That is, white families have almost 10 times the wealth of black families. Most extremely wealthy people derive most of their wealth from stocks. Do you own any stocks? If not, why not? Are you afraid that the stock prices are going to fall? They're going to go down? They may and they do fall from time to time. In fact, they fell this week. What do you think they're going to do next week? I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up or down. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at the Southside School of Financial Freedom.com. Here is my trading watch list from the week ending September 5th, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was CrowdStrike. That's CRWD. It is in the 3rd column. It increased by 5.52% this week, though it did decline on Friday by 3.14%. The decline was attributed to the overall decline of the market, especially tech companies. The company recently reported an earnings beat. Some investors may have wanted an even greater beat. The stock price had run up into the earnings and may be just taking a break. Nothing goes straight up. When they do go up, they pull back before going even higher. CrowdStrike is a cybersecurity company that has gone up about 170% this year. I did not have a trade on it this past week, but I have traded it and generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the 3rd column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of September 5th, 2020, my portfolio is outperforming the S&P 500 index ETF SPY. Year to date, my portfolio is up 17.96% versus 12.56% for SPY, a difference of 5.39%. I am beating SPY by 5.39%. This week, equities, including puts, calls, and ETFs, make up 77.53% of the portfolio. Cash is 22.47%. The cash flow generated for this week was 1.35% of the portfolio account value. The account value decreased by minus 0.46%. Meanwhile, the S&P 500 ETF SPY decreased by minus 2.28% this week. I sold option contracts on 6 different positions: 1 call and 5 puts that range from $209.35 to $468.65. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of FinancialFreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.